Hey guys, Brian Horton with BK Trading Academy, professional investor, owner, and educator. We're going to talk about time frames. What time frames should you enter and what time frames should you exit? That's one of the most common questions that we get here as educators, and it's very important. I'm going to show you the illusions and misconceptions of time frames. We can actually think that we're buying at an appropriate area when we're actually not. So what time frame should you enter is based on a few different things. I'm going to show you and break it down. All at the same time, we're going to analyze NZDUSD. So you get a double whammy here. And also, if you're interested in our academy, we have a lifetime discount promo going on right now. Just go ahead and go to info.bkforexacademy.com. Link is in the description below. Also be aware of fake account. We have an impersonator on Telegram. Most of you guys know that already. If it's not from the link in the description below, do not join it. Do not entertain it. We never ask you for money. We never will do anything like that. So make sure you click the right link. And we also have an impersonator on Instagram. So if you don't get the link from the description below, then it is not us. If you get someone who asks you for money, it is not us. So guys, let's go ahead and look into it right here. All right, NZDUSD as promised, we're looking at the 30-minute time frame. I want you guys to look at this pair here and let me know where would you enter if you would enter at all. Okay, so some of you guys may look at this chart and say, hey, price is just kind of moving sideways. We see our resistance area here. We may see our support area here. We're down here. So if price happens to come up around this area, I would short. And if price happens to come down to this area, I would buy. Okay, and you may not be wrong, but let me show you why you may want to go out to the higher time frame. Now let's go to the 2-hour time frame and dissect it a little bit more. Now we see that there are lower lows here, right? So you were talking about possibly entering here when we were on a 30-minute time frame, but look at these lower lows here. Now this may be your support zone at this area right here where you may be looking to buy, right? And so now if we go ahead and look here, this may still be your resistance area here. Now let's zoom out a bit more. Let's go to the daily time frame. We're going to fix our chart a bit. We're going to delete some things. Now, what do you guys see? Okay, we can possibly see an uptrend right here. So when price goes and tests this trend line here, we may enter to buy at this zone right here and continue to the upside. That may be an option here. Now, is that absolutely wrong? Maybe, maybe not. So let's go ahead to the daily time frame and let's fix our chart up a bit and let's see exactly what's going on. Now, typically, what you guys should do when you're adjusting and going to different time frame, you should always adjust your chart. You see how I'm kind of scrolling out a bit? So just because you're on the daily time frame and you're close, you really can't see everything. You want to adjust your chart, zoom out, spread it out a bit so you can see more price action, and then it will tell you a story. Okay. Now you were possibly talking about buying at this particular level right here. Okay, so price is here. We were talking about maybe buying here, but look at all of this price action down here, right? Our support zone may be around this area here. So it's all perception and it's all dependent on if you're going to be swing trading, if you're going to be position trading, intraday trading, or even scalping. That will determine what time frame you'll execute your trades on. All right, so we always tell our students to start on the higher time frame. It doesn't matter if you're scalping, position trading, swing trading, or intraday trading. You always want to start on the higher time frame because it will give you an idea of where price is above all of this noise. And so this is what I mean. There are 4 stages in trading in any market. It doesn't matter what market you're in. There is an accumulation stage. The accumulation stage is right here where price kind of moves up and down, right? And the accumulation stage is always after a downtrend. So you'll see a downtrend, you will see an accumulation stage, and right after that is the markup stage, which is an uptrend, right? So now we're seeing higher highs and higher lows. And then after that, there is a distribution stage where price will move sideways above, right? So the distribution stage is always after an uptrend. So now that I have an idea of where I'm at, I have an idea of what to do, okay? So after the distribution stage, it's always a downtrend. So the pattern always repeats itself. That's why you should always go to the higher time frame, because now when you understand those 4 phases or those 4 stages, it kind of gives you an idea how to trade it. So even if I'm scalping and I'm on the daily time frame and I know that we may be in a beginning of a possible downtrend, now I know that I only want to trade off of resistance zones, because When you're in a downtrend, you want to trade with the trend. It gives you a higher probability that price is going to go your way. So then I would start drilling down to the lower time frame, adjusting my chart a bit, right? And now I can see exactly what's going on because I want to trade off a resistance zone. So if this is my resistance zone here, I would want price to come back up here and trade from that level, because when you're in a downtrend, you're having more red candles than you are green candles going up. So for example, here's our downtrend right here. This is our lower low. Okay. And then we have smaller white candles or green candles, depending on what color your chart is. It starts to move sideways. And then we're going to have another push of a bunch of red candles because we're in a downtrend. So you always want to sell at a resistance zone. So my chart can get a little bit messy, but I wanted to give you that information because it's imperative. If you haven't seen our free technical analysis course on YouTube, I encourage you to watch it. I'm going to include it right here above or below, wherever you see it. And it's going to be an hour-long free technical analysis course where it gives you trading from A to Z. We talk about these phases. We talk about the anatomy of a candlestick. We talk about trend lines, when to enter, all of that stuff, but you have to watch it from beginning to end. And you can even save it to one of your trading YouTube playlists so that you can watch it continuously in the future. So you want to identify which phase you're in when you're in the higher time frame. So that's the point I wanted to get to. What phase are you in? Now, the higher the time frame you get, you can see a little bit more what phase you're in. So now I'm on the weekly time frame. Okay. Now, what phase am I in now on the weekly time frame? Am I still in that distribution stage where it may be pushing down? Let me show you the possibilities of what's going on. So now I see that this low right here was an all-time low. It matched this price around the pandemic time. Okay. This is March 2020 during the pandemic. That's why price dropped all the way low here. The US dollar gained strength against the New Zealand dollar at that point. It shot all the way up. It came back to retest that low. Because this is a low, price is going to shoot all the way up. So I'm going to give you a couple of scenarios that you can use and take with you for this particular pair. Okay. So number one, you want to see what phase you're in. Okay. Number two, you want to identify what type of trader are you? Are you a swing trader? Are you a scalper, intraday trader? That's what you want to identify, because if you're a scalper, you typically want to enter on the lower time frame. I'll show you in a minute. However, we still want to identify what trend or what phase we're in on the higher time frame. All right. So I noticed this low here at the bottom, and I'm going to go ahead and mark that for you here so we can keep an eye out on that. So because I know I'm at the low here, this is our accumulation stage down here, right? It started to consolidate a bit, and it consolidated for a couple of weeks because I'm on the weekly time frame before it shot to the upside. Now I'm in an uptrend. This is our markup stage here. Okay. Here is our neckline of our current position here. This is our neckline. And once it breaks this neckline, then we will officially be in an uptrend, right? So this is our lower high. This is our lower low. Now it's starting to push up, making higher highs, higher low. Okay. So we haven't quite broken this neckline. So we're technically not in an uptrend, but here's the scenario that may happen. Because price is at a significant area, so I'm going to get my tool here. Here is a support zone. This is a minor support zone because we can see when price had tested this area multiple times, and this is what I mean here. We see multiple wicks here. Currently, we have a wick here. We see price sat here as support before, and then previously this was a resistance zone here. So this is a minor area here. Now, what can happen here? So price is respecting the support zone. And a scenario could happen is that price will push up, retesting this area right here, eventually breaking through it to start an uptrend. So we know our phases. We just completed an accumulation stage. Now, typically next we are in a markup stage. Okay. Now, that is one stage here. So if you are a long-term trader, swing trader, or position trader, you'll be looking to buy actually right now off of this support area. And you can take it to this zone here to be safe. And let me grab my measuring tool. So from here to here, that's 250 pips or so. That's not bad for a position trader. Or you can continue to hold it even longer. Now, just know the longer you hold trades, the higher your swap fees will accumulate. So that you can continue to do that and retest this resistance zone right here. Why is this considered a resistance zone? Because of this peak right here. Okay. And if you did that, if I grab my measuring tool from here to here, that's over 750 pips or so. Not too bad for a position trader. Okay. So you can do that if you're a position trader. Now that I know that I may be in an uptrend, not quite yet, but it's at a nice support zone, I can drill down, let's say to the daily time frame, and see exactly what's going on. Now I see that price began to push up a bit, right? Here's my white candle. And it started and it respected this here. So we had a few touches here in the last few days. We had one here, two, and then we had three. Let me go ahead and delete that and zoom in a bit more so you can see it. And now it's starting to push up, right? So we may be a little bit late, but if you are an intraday trader or a swing trader, you can still buy here with a low lot size, but just know price may come back and retest the support zone before shooting back up. Okay, so if you don't mind risking a few pips to push to the upside because you know price may come back and retest, you can also do that. Now here is another scenario. So let's go ahead and delete that. Now, if you, let me draw this line back here again. Now, if you are a scalper, you want to typically execute on the 1 hour or lower. So let's go down to the 1 hour here. Now, as a scalper, you want to try to get in at as precisely as possible because your risk, you're only risking maybe 10 pips, 15 pips or so. You're only looking to gain 15 to 20 pips or so. So you're in and you're out. So you want to try to get in as best as possible. Now, the best place to get in is at this level here. You don't want to get in somewhere in between here and your resistance zone. You're in the middle. So you want to find your minor support zones, which is here, and your minor resistance zones, which is about this area where these wicks are poking out. We have multiple wicks showing that this is a resistance zone. So right now, this would be a bad area to get in if you're scalping. You want to wait for it to get here and then go to the upside because we know that we're in a possible uptrend. So we want to buy at support here. Okay. Now let me show you, looking at the weekly time frame, why buying may be bad. So it depends on what type of trader you're in because you may not want to buy. And this is why. On the weekly, we have multiple touches here at the support zone. And we know this is a support zone because it has multiple touches. Here is our resistance zone up here, our major resistance zone right here. So because here's more fundamental analysis, right? So we just talked about technical analysis. Fundamental analysis is knowing what's going on with the economy of these pairs. We know the United States dollar is still increasing interest rates, which will make it more powerful. Now, because the USD is the second currency of this pair, if price shoots to the downside, that means it is strengthening, okay, against the New Zealand dollar. And if it continues to increase its interest rates, it will break our trend line, continuing in a downtrend. So that's why it's important to know fundamental analysis and technical analysis and bring those together. And if it breaks our trend line and breaks our support zone, we know that we may be starting a downtrend, okay, or continuing the downtrend overall. So if I go to the weekly and I zoom out, remember, here's my neckline right here. It hasn't broken it, so it hasn't given us a clear indication that it is in an uptrend. So it can definitely come back and retest this area here or just simply break it. So if I go to the monthly, which is one of the highest time frames that I have, we're technically still in a downtrend. So if I get my trend line here, grab it from the top, we're still in a downtrend. Price has not broken this neckline right here. Here's our neckline right here. So if I go ahead and grab my rectangle tool, this is our neckline. So we're still in a downtrend because it hasn't broken the lower high. So there are a lot of different things that you want to take into account before you just open a chart and trade. You always want to see what phase are you in. If you are in the accumulation phase, the markup phase, the distribution phase, or the markdown phase. And then you want to say, hey, I'm a scalper. I want to try to get in at the best possible price. So then you want to drill all the way down to see where's your best entry. That's after you mark your important key levels. Now, remember, I marked my key levels here, my resistance zone, my other resistance zone, my support zone. So you want to mark those key levels as well. And then you want to mark your minor levels. Your minor levels are also your support and resistance zones on the lower time frame. Guys, this is very, very imperative for your entries, for your exits. And so you want to make sure that you spread your chart out, like I said. Spread it out. See what happened in the past. Don't be afraid to spread out and see what's going on, because now I know that I'm right here out of all of this information, all this cluster of information. So guys, if this was helpful for you, Let me know in the comments. Please click the like button, subscribe if you haven't already, and the notification bell. All of our links are in the description below. If you do not click our link in the description below and it's something else, just know that it may not be us. So all of our links are in the description below. And like I said, for those who are looking to have a lifetime access with us so we can hold your hand and be involved in a community of like-minded traders, go ahead and look at our description below for our academy. We have a discount, and be sure to go to info.bkforexacademy.com where you can learn about that promo code. Until the next video, guys, I will see you and you have a blessed day.